Welcome to another audio article from the Intelligent Speculator. This article was published on April 30th, 2020, and the title is Summer is Looking Warm for Stocks, but Winter is Coming. So let's get right into it. In December 2019, I spotted early warning signs that we were at a peak in our credit cycle and that a major economic contraction was going to arrive sometime in 2020 or early 2021. I even wrote about it and sent it to friends, family, and business partners. It was titled 2021, America's Greatest Depression. So you can read that if you want to know more about the warning signs I saw and why I believe we are just now about to start a new economic cycle that comes out of a severe economic depression, which typically occurs every 80 to 100 years throughout history. That's why most of the time people don't see it coming. You see, most adults become quite accustomed to economic expansions that run every 5 to 10 years, with economic contractions, aka recessions, that last 1 to 2 years. And it is really interesting how human behavior repeats the cycle fairly consistently throughout history. However, when you look at the long-term credit cycle, all of these cycles are reset with a major financial collapse and new world order, i.e. a new reserve currency, and major debt restructuring that occurs every 80 to 100 years. And since most people were not alive or were very young when the last reset occurred, these economic depressions catch everyone by surprise, particularly since they are typically preceded by the perception of a booming economy. In most cases, the boom is fueled by large amounts of debt and money printing at the end of the long-term credit cycle that finds its way to equity markets and other asset classes that give the illusion of wealth creation. This leads to people overspending and taking on further debt. Some examples that we see from history are the Depression of the 1930s that led to the US dollar as the reserve currency that replaced the British pound via the Bretton Woods system in 1945. Prior to that, it was the World Depression of 1837 which solidified the British pound as the reserve currency of the world that replaced the Dutch guilder. Before that, it was the economic crisis of the mid-1750s, where the Dutch guilder was the reserve currency and replaced the Spanish real of the 1600s. So as you can see, over the past 500 years, history isn't repeating itself exactly, but it does have a rhyme to it. And now we are at the beginning of the end, where equity markets and financial assets around the world will suffer historic devaluations, which we haven't seen since the 1930s. As of now, equity markets have recovered half or more of their losses in March, when the first major sell-off occurred and caused markets to fall by 40%. And typically with these first sell-offs in the late-term credit cycles, there is typically a bounce that occurs, or a bear market rally as it's more commonly phrased. For example, the sell-off of the Dow Jones in October 1929 caused a 40% drop. But the market briefly bottomed out and went up for the next 5 months, so that it was only about a 20% off from its original highs in March of 1930. This was caused by the Federal Reserve cutting interest rates to 0% and printing large amounts of money to support the markets. Sound familiar? But then another steep sell-off occurred, and equity markets would continue to fall for the next 2 years until they bottomed out at only 20% of their original value. You heard that right. Stocks lost 80% of their value from 1929 until 1932. Adjusted for inflation, markets would not recover their original values until 1959, almost 30 years later. That is how much bad debt there was in the system then, and one could argue we are in a much more precarious position now. And that's why I think we have seen a brief bottom in the equity markets, and we will see them muddle higher into the summer months and then fall. But I believe at the end of the year or early 2021, the next big sell-off will occur and equity markets will fall in similar value to what we saw from 1929 until 1932, putting a bottom sometime around 2022 at deep discounts. So what's next? Because I don't want to pick absolute bottoms, I'll probably start picking up quality, high dividend paying companies in mid to late 2021 when most of the damage will probably be done. In the meantime, I plan to profit from the coming sell-off at the end of this year / early next year by doing two things in the Forex market when the price actions tell me. One, I'll be buying safe haven currencies like the Japanese yen, US dollar, and Swiss franc against commodity-based currencies like the Australian dollar, New Zealand dollar, and Swedish krone, meaning the safe haven currencies will appreciate against good time currencies that will decline. Two, I'll be buying non-leveraged inverse ETFs, basically meaning these ETFs rise in value if equity markets go down. Ever since December of 2019, I have cautioned to get out of equity markets and move into cash. This way, one will actually have money to take advantage of the opportunities that are to come. I cannot offer any kind of financial advice, but if it was my money, I would take the bull market rally over the summer to liquidate stocks and be in a cash-heavy position. Then, when the time comes, you can buy stocks in great companies at discount prices that will set you up for a very prosperous future, regardless of what stock prices are doing. And while U.S. Treasury bonds will do well if and when the next market crash comes, I would prefer to stay out of them, as those will be ticking time bombs in the coming years, and there are plenty of other financial instruments that I can use to profit in market crashes. However, if you are looking for a more passive way to ride out the next 1 to 2 years, bonds could be a very profitable play as well. Just be ready to sell when the market bottoms, because interest rates have only one way to go after that: up, meaning the price of those bonds will go down. And gold, well, the gold bugs aren't going to like me when I say it's probably going to suffer over the next 1 to 2 years as well, as it does most of the time during deleveraging periods. However, I think gold, and more importantly silver, will be available at bargain prices in coming 2 years. And that's when I start unloading cash and moving into insurance money like silver and gold. A new monetary system is coming, and the sun is about to set on the US dollar, but not before it has one last shining moment in the winter of equities. But that's a story for next time. Stay tuned. Thank you for tuning in to another audio article. If you would take a minute to like and subscribe, we would appreciate that. And hit the bell icon if you want to be notified when new episodes are available. If you would like to learn more from the Intelligent Speculator, feel free to join our exclusive Facebook group and interact with Lathan Fritz, the Intelligent Speculator himself, or keep up to date with us on Instagram, Facebook, and Twitter. Good day.